Good morning and welcome to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the floor of the New York Stock Exchange. Well, stocks are coming off another record close after the Dow Jones Industrial Average jumped 300 points to finish above 44,000 for the first time ever. The Trump trade continues to take markets higher. And with broad-based gains, fundamentals like earnings and economic data are now coming back into focus. Yes, earnings season is still underway, despite that storyline taking a back seat the past week amid the election results. Well, NYSE-listed companies like Shopify, On Holding, Home Depot, and Shift4 Payments reported earnings before the bell today. And let's take a look at what's on tap in today's show. Well, first up, as those small cap stocks rise, we'll take a look at the Business Optimism Index released this morning with the National Federation of Independent Business. And as crypto continues to surge, industry expert Matt Hogan, the chief investment officer of Bitwise Asset Management, will talk long-term price targets for Bitcoin. Finally, Madison Square Garden Entertainment and UFC will ring the opening bell before UFC 309 takes place Saturday in New York. UFC Hall of Famer Frankie Edgar is going to join Trinity Chavez on the floor after that opening bell. Well, speaking of the markets, we have a great markets expert to break down everything we need to know today, as stocks are set to take a breather this morning as rates come into clear focus. Of course, after those record highs, I do want to bring in my first guest. Joining me now with more is Kevin Gordon. He's a senior investment strategist at Charles Schwab. Kevin, good morning.
Morning. Nice to see you.
Yes,
to be here.
It's great to have you on the show, as always, Kevin. And what should our viewers make of the action that we're seeing in stocks today?
So I think it's a sort of a continuation of some of the momentum that you saw last week, but I would pay much more attention to what is kind of has been this leadership shift that has been underway, which predated the election. You had started to see some momentum in small caps. There was some momentum in the broader, deeper cyclical parts of the market. So I would expect that to continue. I will say that the moves that we saw last week, the magnitude of the increase, whether it's in the Russell 2000 or whether it's in areas like financials. You probably shouldn't expect that in perpetuity because they were so aggressive. I think that was the market, reaction really in response to the election and treating it more as a clearing event, and the fact that, the consensus going into it was that there was an expectation that this was going to be a long, drawn-out process of figuring out who the winner was. So I think the fact that it was so decisive was, good from a market standpoint of being able to get through all of that uncertainty and now look forward to what potential policy proposals are. So the bigger story from our perspective is that you had relatively strong breadth heading into this. Breadth metrics have held up, improved in some cases, especially down the cap spectrum. So that to me is a much more important market story, which has sort of been, I think, the broader umbrella with the election kind of hanging under it as just one item.
Let's talk about interest rates, because the Fed, as expected amid the election news last week, did move forward with 0.25 percentage point rate cut. What is the bond market telling us? Potential inflationary trends indicating about how that rate path might change going forward.
Yeah, so what's interesting about the bond move is that, up until this point, or still at this point, last I checked with the Economic Surprise Index, which is put together by Citi, there's also one put together by Bloomberg, but the rise in yields has been consistent with economic data coming in better than expected. So it's not as if it's not justified on the part of the bond market. To me, though, if you do continue to see this move up in bond yields, and if it's driven a little bit more by expectations of inflation maybe staying a little bit stickier and Fed policy not being able to get as easy or as low as had been expected, that to me at some point will become probably an issue for stocks. Maybe more so down the cap spectrum as opposed to for the large cap space. But I think the important thing to keep in mind now from a policy standpoint is that it's pretty cloudy for 2025. Even if you were to separate it between what can be done unilaterally by the incoming Trump administration versus what has to be done with congressional approval, there's the tax cut side of things, which probably comes later, and you need it to be approved by Congress. But then there's tariff policy, immigration policy, which can be done much quicker. So I think that if there's going to be signals from the bond market from an inflation perspective, stemming specifically, I would think from tariff policy itself, that probably comes more to the front burner as an issue for stocks and definitely as a volatility driver.
For our viewers watching, potential investors wondering, should I reallocate, make portfolio adjustments, maybe add to this market in this environment? What would you tell them?
Well, regardless of what had happened and what is happening, with everything election related, and to the point earlier about all the aggressive moves we saw last week, it could be jarring for some investors because you feel as if the market's kind of getting away from you if you're underexposed to certain areas, but also can be enticing because we've seen such promising moves for certain parts of the market, especially within small caps. The thing to keep in mind is that, as I mentioned, the breadth setup was relatively healthy. So for the most part, if you've got most of the S&P in an uptrend, which is the case, now you've got slightly more than 2/3 of Russell 2000 members in an uptrend, that tends to be a relatively healthy backdrop. And I think that what was nice heading into the election, call it a couple weeks preceding it, you had gone through a relatively swift kind of washout in sentiment because there was volatility that crept back in both to the bond market but also the equity market. So you haven't gone completely unchecked this year where it's just been this relentless increase without some churn under the surface in indexes like the S&P, but also without some sentiment corrections along the way. So to me, what would be more concerning is if you did for some reason consistently make new all-time highs for the major indexes, but you had frothy sentiment the entire time. So the fact that we've been able to go through some of those cycles, I think is a relatively healthy development. So from the standpoint of staying invested, focusing on the long term, then yeah, I think it definitely makes sense to stay, long stocks and allocated. I would just be, aware of the potential disruptions that come next year, and we haven't put our outlook together yet, but that is going to be a theme of ours, just being aware of what the volatility drivers are, some of which are going to kind of be resurrected from 2018, 2019 when we were in the first trade war with China.
We'll get that inflation report tomorrow on consumer prices.
Yeah.
What are the key economic indicators, Kevin, that you're following that are giving you a sense as to the health of the economy?
Well, CPI for sure, because I think that it's gonna start to dictate a lot of, and we won't get any signals for a while because we, number one, have to wait to see what policies are enacted by President-elect Trump, but also the Fed's reaction function to those. And I think, evidenced by some of the questions that Powell was getting last week during the press conference. And in fairness, nobody knows the answer to this yet, but how much of it is going to be inflationary or at least put maybe a little bit of a higher floor under inflation. And that, I think, is going to be a really big key heading into next year and how the Fed adjusts policy and is looking at policy. Because if you raise the terminal rate, it's a pretty big shift relative to where things were even a couple of months ago, where the labor market looked like it was softening relatively quickly, but you also had a relatively strong path for disinflation. That path has always been choppy in our view, but if you now get a little bit of a reflationary pressure, whether it's from goods prices finding a little bit of reacceleration or from the labor market because of more restricted labor supply, that to me probably fans the flames a little bit from an inflation standpoint. Not anything returning to what we had in 2021 or 2022. I don't think we go back to 9% CPI. Let's hope, but there's a difference of kind of hovering around 3% versus closer to 2%, and the Fed has been very clear that they're not going to declare victory at 3%. They want to get down to 2 in a more stable and consistent way.
Kevin Gordon, Senior Investment Strategist at Charles Schwab. Kevin is going to check back in with us after the market opens. Kevin, thank you.
Thanks.
All right, well, stay with us because up next we will talk more about small businesses, of course, after former President Trump's incoming agenda of domestic-focused policies. The National Federation of Independent Business is going to join me up next.
Backed by Sequoia and Brookfield, Batch is a tech-enabled logistics brokerage platform that focuses on first-mile logistics in all major ports. We're going to find out how it's streamlining the supply chain from the CEO on this episode of Taking Stock.
So Batch was formed by tri-party merger. So I originally founded the company in Chicago. It was called CDL 1000, which was the fastest growing company in our space. And after completing 2 acquisitions, we rebranded into Batch, or Batch Freight. And moving forward, the thesis behind Batch is, we are building the largest digital wholesaler of freight industry. We're tech-enabled, and what we're trying to accomplish, we are continue batching shipments. And the way we sell them to small trucking companies and we go back to our customers, we are batching.
You're doing things in big batches, right? Talk to me about who your customers are and who benefits most from your services.
Our customer base, it's all blue chip Fortune 500 companies from Walmart, Kroger.
Many NYSE listed companies.
Yes, yes. It's most of them Fortune 500 companies.
Amazing. And talk to me about your investor base.
Our last transaction was sponsored by Brookfield. Brookfield's been tremendously great partner to us. And historically, we have Sequoia Capital, Mucker Capital, Shea Ventures, and UIT Canadian Family Office in helping us.
If you want to highlight any big milestones that you have accomplished this year, and what are your key priorities for the beginning of 2025?
So over the last 12 months, we successfully completed 2 transformational acquisitions to us. We bought a company called HTS down in Jacksonville, Florida, and then we completed our second acquisition of Next Trucking, which was one of the biggest tech platforms in our space. Our milestone, again, it a little bit goes back to the cycle.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the New York Stock Exchange. Well, earlier this morning, the National Federation of Independent Business released new insight into the level of optimism for small businesses. The index rose by 2.2 points in October to a level of 93.7, but it is the 34th consecutive month that this index was below its long-term average of a level of 98. Last top 98 back in December of 2021. Well, joining me now to break down what this means and the true state of business on Main Street is Holly Wade, Executive Director at the NFIB Research Center. Holly, it's great to have you on the show today. And what is your takeaway from today's report?
Good morning. It's great to be with you. So our report did show a bit more optimism among small business owners, and especially in the areas of sales expectations and looking forward in the business climate, better business conditions in the next 6 months. More small business owners expect it to improve, which is a great sign for the small business economy, and also capital spending plans. So we've seen a depressed level of capital spending over the last number of years, and that picked up a bit in their plans to make some of those expenditures in the next 6 months. But uncertainty is still high. We've likely will resolve some of that uncertainty in this next survey that will release next month. But coming up to the election, uncertainty was historically very high, record levels. And a lot of that has to do with just how all of this will unravel, how much easing there will be in the next quarter on prices, and also labor, the tight labor market that's still impacting a lot of small business owners.
Holly, before we get into some of the economic data, I want to go back to what you mentioned earlier, that uncertainty leading into the election certainly was taking a toll on some of these small businesses. Now that we have a decisive outcome, as my markets guest was telling me earlier, certainly Wall Street has benefited that from the certainty that has provided. How does that impact small businesses? That same sort of clarity, perhaps, as to how to operate, how to create a plan going forward.
Absolutely. So uncertainty is one of the bigger challenges for small business owners in not knowing how to proceed forward in business operations, in expansion opportunities, what that might look like. So after the election, with the next or the follow-up survey that will release in December, that has probably been mostly resolved outside of the Federal Reserve and what they're planning to do as far as further rate cuts going forward and how that might impact small business owners who are looking to finance some larger projects that they may have been sitting on the sidelines. So part of the uncertainty has been mostly resolved for small business owners as they're looking at the configuration of Congress and the next administration. But when it comes to financing costs and interest rates, that component of uncertainty is still very much alive for small business owners.
Interesting. Of course, we've heard the Fed provide its forecast for rates ahead. The economic data, some of it has certainly been strong. I know inflationary pressures, as you've mentioned, have weighed on small businesses, and we'll get that consumer price index report tomorrow. Holly, provide more color as to how these small businesses may be outsized affected by these inflationary pressures versus some of the larger companies.
Certainly. So one of the biggest challenges for small business owners in dealing with these increased cost pressures, whether it's supplies and inventories or compensation increases in remaining competitive, in retaining current employees or recruiting for still those very high levels of job openings that they're experiencing, is that the business owner themselves is having to navigate how much, how often to increase their prices, to pass along those costs to their customers, or try to absorb those costs internally in some way of reducing their overhead. So it's a challenge for small business owners in their capacity to navigate this, and they're worried that they still need to remain competitive with their neighboring business or larger counterparts.
Holly, we only have about 30 seconds left, so this is going to be a tight question and answer. But of course, one of President Trump's campaign promises was huge tariffs. What will be the impact on small businesses if that does come to fruition?
Certainly. So small business owners, it will likely depend on the type of industry that they're in and how that will impact them as far as higher tariffs, the degree to which. So that still remains a big question mark as far as its overall impact on small business. That will certainly compound the problems that they're dealing with in higher costs related to what they've currently experienced in operating their business. So it is still a big question mark. We'll see moving forward how that transpires and what impact that might have on small firms.
Holly Wade, Executive Director at the NFIB Research Center. Holly, thank you.
Thank you.
All right, well, stay with us because up next, we'll continue the conversation all on small business with the co-founders of a Brooklyn tea company. Jamila and Alfonso Wright will join Trinity Chavez after the break.
Big Geo sits at the intersection of geospatial software, analytics, and architecture. Why it's so important is we're helping to increase performance for massive geospatial data ecosystems.
Brett, we're here at the New York Stock Exchange. You're here with the Startup Challenge by Snowflake.
Yes.
So tell me, what were your key takeaways from this competition, and how do you see these insights influencing Big Geo's journey forward?
It was incredible being down there for the Snowflake Startup Competition. It was really encouraging to see where they're going with their ecosystem, and what they're doing with native apps specifically is where we're kind of going to market with them. And the support network for me was the biggest takeaway. It was once we met with them and we were like, we're going to work together, it was just everybody piled in and we got the job done. So I was very encouraged, and I know Brent can speak for that as well. It was knowing that we picked the right ecosystem to go to market with. Snowflake was that for us.
Now, Brent, the data center and cloud landscape is evolving rapidly. How does Big Geo's technology align with the future of data centers? And what role do you envision for your company in this transformation?
It's an incredible technology for the data center space. I mean, we're having these conversations on a daily basis with some of the world's largest hyperscalers. Our technology sits right up against, it's built on first principles solutions from the ground up to increase performance at the data center. So we're looking at this technology as a way to reduce the amount of electricity consumption for data centers when it comes to geospatial performance, which is vastly becoming or quickly becoming one of the largest computing workloads at the data centers. So it's a very important technology to align with our hyperscaler partners and give them more, save them on electricity.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, as we increasingly cover small business, one company is building itself even amid this environment of high rates and, yes, sticky inflation. I want to bring in Trinity Chavez, who joins now with more. Trinity, good morning.
Good morning, Kristen. That's right. So in today's challenging economic landscape, many small businesses are struggling to stay afloat as high interest rates and persistent inflation squeezes both consumers and companies alike. Yet, some are surviving, but also finding ways to thrive despite the headwinds. One such business is Brooklyn Tea, a beloved tea company founded right here in the heart of New York. I am joined now by the power couple behind this business, the co-founders of Brooklyn Tea, Jamila and Alfonso Wright. Good morning, you two.
Good morning.
Thank you so much for joining us. It's a pleasure to have you on the show. I do want to start the conversation by talking about how current economic conditions, how it's impacted Brooklyn Tea, if any, and what strategies you have implemented to really manage all of these challenges.
Yes, so thank you, Trinity. And it's been a very hectic time. We know coming into 2023, we dealt with a lot of inflation increase from everything from cups to straws. And so it's largely been us being savvy about reassessing who we're doing business with, who are our co-packers, because the costs that we originally signed off from are fluctuating, so you have to really be in research mode so you can beat those numbers.
Yeah, so it kind of brought an unwitting opportunity to us to reassess all of our sources and just try to find less expensive folks. And we did find some savings that we didn't even think about looking for prior to inflation happening.
Now, Jamila, I do want to ask you if you have noticed specific trends right now in the current economic conditions. Have consumers cut back on their spending strategies?
So I think it comes in waves, right? So I think when you're looking at the summer season where folks can do a little bit more meal prep, maybe because they have a little bit more time off, we see a bit of a summer slump. But as we're picking back up into late fall and winter, where people are feeling a little bit more whimsical, they're feeling more in a spirited mood, especially with tea specifically, and people just want something comforting when they're not feeling so great, whether it be financially or something going on with their immune system. We're finding that we're actually seeing an uptick with consumers being interested in tea this season.
You know, Alfonso, I do want to talk to you about how this has sort of changed your business strategy moving forward, battling inflation, rising costs, but obviously sustaining your customer base. Talk to me more about that.
Yeah, so we've learned after going through the pandemic and inflation and all the other turmoil that's happened in the last 5 years, that we just have to never rest on our laurels and keep researching, keep looking, keep finding new ways to do business. And that's how we've gotten to where we are. We just never can rest or settle. And that's really the new strategy is keep changing, keep being on social media, keep doing everything.
Yeah. And if I can add,
Go ahead, Jamila, go ahead.
Yes, and if I can add, we've also really tried to shield our customer from increasing prices. So we really pay attention to our bulk pricing, and we pay attention to keeping our more general teas at cost or close to at cost for customers. And our more premium teas, we're increasing those prices to try to make up for the difference, but we're really trying to keep the general public shielded from the increase in pricing.
That's really nice of you, especially as a small business. I do want to speak to you more about enticing customer engagement. You know, when we were there on location last year, when we first met in 2023 or 2022, but we were doing a field shoot package at your store. One of the things that really set your store apart from other local businesses was the fact that you source everything locally, even when it comes to the things that you are selling in your store, when it comes to the pastries, or various different products to really support other small businesses. Talk to me more about other ways that you're going about enticing customers to get it's an overall experience when they visit Brooklyn Tea.
Yeah, so we invite our customers to also host their own special events at the shop at no additional cost. And so if there's an artist who really wants to put on a showcase of their pieces, and if there is a singer or performer, we just had a performance 2 nights ago. And so we really want to give people, because space is so expensive, rental fees for venues are so expensive, we really want to be a place for people to push forward their careers and their aspirations without the monetary red tape.
Alfonso, would you like to add to that?
Oh, I can't add to that. That was perfect.
Well, we appreciate you joining us on NYSE TV Live this morning, bright and early, and we look forward to continued conversations on how you continue your success.
Yes,
Thank you.
You're the best, Trinity.
See you guys soon.
See ya.
Up next, we're going to tell you more about today's bell ringers. Madison Square Garden Entertainment and UFC will be ringing the opening bell before UFC 309 takes place Saturday in New York. UFC Hall of Famer Frankie Edgar is in the house, so stay tuned. In today's industrial landscape, the health of machines is crucial to maintaining efficiency and productivity. Joining me today is Sar Yoshevitz. He is the co-founder and CEO of Augury. We're going to discuss their innovative approach, the future of the industrial AI adoption, and how partnerships with key industrial players have shaped their growth on this episode of Taking Stock.
At Augury, we work with the largest manufacturing and industrial companies in the world to make their production lines more reliable, more productive, and more sustainable. And we do this by infusing every layer of the manufacturing stack with AI and digital solutions, starting from machine health, which is the maintenance and reliability aspects, as well as process health, which is process optimizations. How do I manufacture quality product? How do I reduce the waste? The energy consumption of my lines.
And speaking of machine health, let's talk about Augury's machine health since raising $180 million in funding.
You know, I mentioned we work with the largest companies, and what we've learned through the years is that the problem that we solve, machine health, is not just maintenance and reliability, it's a supply chain resiliency problem, right? It's a sustainability problem, a talent shortage, and upskilling problem. And you know, add to that the geopolitical tensions that we're living in, the environmental challenges that we're facing. I think the industry today understands that we have to fundamentally transform how manufacturing is being done, right? And as I mentioned, how do we bring AI and digital solutions to every single layer of the manufacturing stack? So what the funding enabled us to do in the past 3 years is not only continue growing our business, right? So today we're working in over 40 countries, as an example. We entered new segments with our partner Baker Hughes. We went into oil and gas and the energy sector. But on top of that, it enabled us.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Well, in just a few moments, UFC Hall of Famer Frankie Edgar is going to celebrate the opening bell ahead of Saturday's UFC 309 event at MSG in Manhattan. Today's opening bell also brings together several members of the NYSE community. UFC is part of NYSE-listed TKO Group that was established last year when NYSE-listed Endeavor merged with the UFC and WWE, putting them into one sports entertainment giant. Well, 3 MSG entities are listed on the NYSE. They include Madison Square Garden Entertainment, Madison Square Garden Sports, and Sphere. Think of that Sphere in Las Vegas. Well, my colleague Trinity Chavez joins me now with more from the floor and can give us a glimpse into why UFC fans, Trinity, I'm sure are excited, probably heading into Saturday. What's the pulse on the floor?
I know there's a lot of excitement here on the floor, Kristen. Frankie Edgar began his UFC career in 2007, and he was, I just want to point out to our viewers, we're getting traders walking past us because, again, this is an active trading floor. But again, back to Frankie. In 2007, he was inducted into the UFC Hall of Fame, this year, and he held the UFC lightweight title from 2010 to 2012. And we're going to be speaking to him in just a little bit, hitting on all of these points. And as you said, the main event for UFC 309 is a heavyweight title fight between John Bones Jones versus Stipe Miocic Jones, and this is considered to be arguably the greatest fighter in the history of the sport. While Miocic hasn't fought since March 2021. Again, a lot of action here playing out on the trading floor as we get ready to ring the opening bell. The crowd here is gathering just right behind me. Dozens of people here supporting UFC, TKO. Everybody is just gathering right now, utilizing every opportunity to capture this bell podium, and the whole team team that's on it as they get ready to open up the U.S. equity markets. And I think we're just about 10 seconds out, Kristen.
That's exactly right, Trinity. We'll see then the Hall of Famer, of course, on the podium. He's then going to join you live on the floor. Let's take a listen to today's opening bell. All right, we are officially off to the races here at the New York Stock Exchange. UFC opening the trading markets. Stocks fractionally higher, extending those record highs yesterday. The small caps leading the way, up about 1.5% on the Russell 2000. And I do want to bring back our market expert, Kevin Gordon, senior investment strategist at Charles Schwab. Kevin, great to have you rejoin me here, and a pretty strong open. What do you think?
I think what we were talking about earlier in terms of momentum, it's still pretty strong for small caps. You know, best week last week since November 2020. What I do find interesting actually with the small cap trade in particular is that even though you've had this really powerful thrust, and you're I think if you close up a couple of percent today for the Russell, you'd probably be above that November 2021 high. What's interesting with that though is that you're still not seeing breadth, I think, reaccelerate to the zone that you would need it to be for this to be more sustainable. Not to say that this is to completely be faded, but you would need to see, I think, upwards of 80% of members getting above their 200-day moving average for this to really, really have legs, and for it to not be bothered by a continued increase in yields. That's one of the disconnects I think has happened, so far in the market. Not to say that it can't last at least for another couple of days, but I would keep that in mind. If there is a little bit of a waning momentum, it's probably going to be driven by the lack of upside, across the spectrum of all small cap members within the index.
We saw the Business Optimism Index come out earlier today. Someone from the NFIB joined me earlier, the Research Center in particular. From your vantage point as a strategist, how are you interpreting that report today?
So I think that the soft versus hard components always need to be looked at sort of in their own spheres. And the soft components, anything survey related, how are you feeling about the economy? How are you feeling about things in general? Those have been kind of down in the dumps relative to the hard components. But that's been, really a phenomenon of this entire post-pandemic cycle, where everything sentiment or survey related has been pretty weak. A lot of it, no surprise, driven by inflation, which is still the number one problem that's cited by small businesses as plaguing their business, but plaguing the broader economy. From a hard component standpoint, things have been improving and have been on an improving trajectory. I think, if there is maybe a stumbling block for that in the next year, it would probably be to what we were discussing earlier, anything tariff related, anything labor related, because small businesses from a labor standpoint, the largest job creators, on net in the country. So I think that's probably going to be definitely a story for maybe mid to late 2025, but something to keep an eye on, because the nice part about this current cycle is that we are starting to see a recovery in some of those metrics that have gone into their own recessions, many of which are in the confidence world. But if that is sort of stunted by anything policy related in 25, that's what I would keep an eye on. But again, early days to be discussing, anything that sort of kneecaps that right now.
We are amid earnings season, on the back half of it, I would say, despite a lot of election-grabbing headlines in the past week. How are these companies performing? What's
interesting is actually the earnings beat rate has been really solid for the past several years. It's sort of permanently found this higher plateau, but we've seen it come down quite a bit this quarter. It's still in the 70%, low to 70%, mid 70% range. But I find it interesting that it's kind of lost a little bit of momentum at the same time that the revenue beat rate just hasn't been able to get up and running and find any kind of upward momentum. And that, to me, and we wrote about this a couple of weeks ago, where this spread that you're seeing between earnings and sales beats, it really means that profit margins have been able to beat by a pretty significant degree. But how long can that really last until a weaker sales picture starts to become more of the dominant story? I feel as if we're probably in that shift right now. Not to say that, you know, the earnings backdrop suddenly turns negative for you know, the next quarter or the next year, but I think that the market is probably starting to sniff out the fact that the sales picture is going to have to really start to improve for a lot of companies, especially because you've almost gone through this completion of the inflation wave. Not that we've gotten back to 2% completely, but going from 9% CPI to low 2% CPI, the fact that that has happened while companies have struggled more with sales just shows you that they can't benefit as much from inflation. So I think that's going to be a really important aspect for next year.
Let's talk about retail sales. We'll get that data on Friday, of course, ahead of the all-important holiday season. What do you expect that'll tell us about the state of the consumer?
So probably the last batch, hopefully the last batch of data that has the lingering hurricane effects. So if there is a little bit of a weaker print, I would look for anything that is specifically, you know, targeted to or has been targeted by the hurricanes. The control group is always, I think, the most important to look for. It's the one that is that direct feeder into the consumer spending portion of GDP. That in inflation-adjusted terms, you know, most estimates are kind of hovering around 0.1 to 0.2 percentage points of an increase, which is definitely a step down from what you've seen. But at the same time, the broader trend for the consumer is still relatively healthy. I think it's probably a good thing to see the control group maybe come in just a little bit so you don't fan any inflation pressures, especially because that's now becoming more of a concern for next year. But I would look for, number one, the hurricane impacts and how much of that is expected to be reversed, and then number two, what the actual trend in the control group is. Okay, great. Kevin Gordon. He is a senior investment strategist at Charles Schwab. Kevin, always good to get your take. Thanks for joining. Yeah, thanks so much.
All right, well, stay with us because we are going to take a quick break. But on the other side, Trinity Chavez is going to speak with today's bell ringer and UFC Hall of Famer, Frankie Edgar, on the other side.
Dina, it's wonderful to have you on Floor Talk. Thanks for joining me today.
Thanks for having me, Judy.
Dina, Lux Capital invests in areas you call matter that matters. Tell me about this philosophy that drives your investment decisions and why it's so important in today's landscape.
Absolutely. You know, we have a couple of cool catchphrases about our portfolio. One of them certainly is matter that matters, and another is that we love to invest in companies that are turning the impossible into the inevitable. And that was really one of the things that drew me into Lux. Whether we're investing in health tech and biotech and defense, in AI and consumer, if you look across the portfolio, you'll see a thread, which is entrepreneurs who are absolutely mission-driven, investing in incredibly challenging concepts and taking them from that concept to the inevitable commercial reality and hopefully one day ringing this bell.
Now, you mentioned healthcare. It's one of Lux's core focuses. How do you identify overlooked areas in the sector, and what impact do you hope these investments will have on advancing human health?
We have quite a few companies that kind of meet that criteria in the portfolio. And as I'm sure you know, women's health is a major area of focus and one in which we've been investing for quite a few years, and we've deployed well over $100 million into this space. I'm on the board of companies like Maven Clinic and A-Life, Summer Health, and quite a few others. And we started investing really before the category took off. And the New York Stock Exchange has hosted a Women's Health Summit. And so I know that you know how important this area is. But really for generations, it was an area that did not receive a lot of attention on the R&D side and certainly on the venture side as well. And we know, of course, that not only are 50% of the population comprised of women, but 80% of the decisions and the dollars in healthcare are actually controlled by women.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler in studio. You saw UFC Hall of Famer Frankie Edgar on the opening bell podium moments ago as we open the stock market here at the NYSE. And right now, I want to send things down to the trading floor where my colleague Trinity Chavez is with Frankie Edgar. Hi, Trinity.
Hi, Kristen. That's right. UFC Hall of Famer Frankie Edgar, straight off the bell podium, is joining me now to talk more about being here at the exchange, what it means to him, and obviously his storied career. Frankie, it's great to have you.
Yeah, good to be here.
And you were talking about how you have been here at the exchange before, but it's the first time opening up the U.S. equity markets. How did that feel?
Yeah, it was cool. Growing up, you see this floor in movies, people going nuts. So it was cool to open the the bell for the day.
And How does it feel to have this privilege, being the bell ringer today, with your storied history, being a UFC Hall of Famer, and millions of people from around the world were watching you open up the market?
Yeah, it's an honor, to be able to use my, what I've done in my career to kind of do something like this. I have my son up there with me. UFC TKO is now, traded, so it's a good fit for us.
Talk to me about some of your most memorable moments in your career, having your son here today to see his dad open up the markets, and just having UFC honor you at such a capacity as a UFC Hall of Famer.
Yeah, winning the belt always takes cake for my memories in the UFC. And being here with my son and having the UFC, trust me to do this and honor me is always awesome. Anytime you get some recognition for what you've done in the past. So, got a great relationship with the UFC, and I'm a Jersey boy, so I didn't have to drive too far to get here.
Amazing. And since you started your career, how have you seen UFC and MMA evolve through the years?
Yeah, it just became more popular as it went on. It's a mainstream sport. I always consider, they talk about the top 4 sports. I think you could say the top 5 now, because UFC is, one of the mainstays. And, to be with the company for, I think, about 16, 17 years in my career, to watch it grow was amazing. And, the future of this sport, I don't know how much bigger it can get, but it's going to continue to grow. I know that.
I do want to talk to you about transitioning to life after the octagon. Where do you see the biggest opportunities for athletes such as yourself embarking in the entrepreneurial space?
Well, I own a business myself. I opened up my own jiu-jitsu and mixed martial arts school, so I'm currently doing that. But yeah, the UFC gives you a great way to build your brand. You get around a lot of interesting people, network really well. So there's a lot of options for fighters afterwards, especially after they built that brand the way they did.
And you have countless fans around the world. Talk to me about how you would like your legacy to be remembered.
Just a guy that went in there and always left his heart and soul in the octagon. Don't have any regrets. I did everything right, did everything the right way. Walked out, feeling good about my career.
And for young fighters looking to make their mark as an athlete, what advice would you have for them, especially as they try to embark on the UFC space?
Yeah, stay in the gym, train hard. Don't pay attention to too much of that outside noise. Everybody wants to get on social media. I think stay in the gym before social media.
Amazing. Well, good advice. Thank you so much. It was a pleasure having you, Frankie.
Yeah, thanks for talking to me.
Now I'm going to send things back over to my colleague, Kristen Scholler, in studio.
Trinity, thank you so much. Of course, that'll be a big event on Saturday at MSG in Manhattan. And while UFC fans certainly are hyped about that, we know Bitcoin investors have plenty to be excited about as well. We'll find out what is behind the token's recent rally and how long it'll last up next.
Dina, it's wonderful to have you on Floor Talk. Thanks for joining me today.
Thanks for having me, Judy.
Dina, Lux Capital invests in areas you call matter that matters. Tell me about this philosophy that drives your investment decisions and why it's so important in today's landscape.
Absolutely. We have a couple of cool catchphrases about our portfolio. One of them certainly is matter that matters, and another is that we love to invest in companies that are turning the impossible into the inevitable. And that was really one of the things that drew me into Lux. Whether we're investing in health tech and biotech and defense, in AI and consumer, if you look across the portfolio, you'll see a thread, which is entrepreneurs who are absolutely mission-driven, investing in incredibly challenging concepts and taking them from that concept to the inevitable commercial reality and hopefully one day ringing this bell.
Now, you mentioned healthcare. It's one of Lux's core focuses. How do you identify overlooked areas in the sector, and what impact do you hope these investments will have on advancing human health?
We have quite a few companies that kind of meet that criteria in the portfolio. And as I'm sure you know, women's health is a major area of focus and one in which we've been investing for quite a few years, and we've deployed well over $100 million into this space. I'm on the board of companies like Maven Clinic and A-Life, Summer Health, and quite a few others. And we started investing really before the category took off. And the New York Stock Exchange has hosted a Women's Health Summit. And so I know that you know how important this area is. But really for generations, it was an area that did not receive a lot of attention on the R&D side and certainly on the venture side as well. And we know, of course, that not only are half 50% of the population comprised of women, but 80% of the decisions and the dollars in healthcare are actually controlled by women.
Good morning and welcome back to NYSE TV Live. I'm Kristen Scholler here above the iconic trading floor. Well, one of the biggest developments on Wall Street over the past week might not be in the major indexes, rather in the cryptocurrency world. Bitcoin, the world's most popular crypto, has seen a meteoric rise since the presidential election, trading at about 69,000 a token when the polls closed, and trading at 87,000 a piece as of market close yesterday. Well, we see the token currently trading just around that level at about 86,000. So clearly that momentum has stuck. And joining me now is Matt Hogan, Chief Investment Officer at Bitwise Asset Management. Matt, it's great to have you on the show. And you have such good insight when it comes to the crypto space. So break down for our viewers what is behind this recent surge.
Yeah, there's just been a sea change in Washington as a result of the election. You know, crypto has operated for the last 4 years with a regulatory cloud, with a reputational cloud. It's still made progress. Bitcoin went up 400% in the last administration, but those regulatory headwinds have now become tailwinds. We have a pro-Bitcoin president, we have a pro-Bitcoin Congress, and I think what we've seen so far with the market going up is just a down payment on what we'll see in 2025.
What do we know about the pro stance that both incoming President Donald Trump and Congress have?
Yeah, I think we can count on 3 big things. The first is a change at the SEC from one that's pursuing regulation by enforcement to one that's looking for regulatory clarity. Crypto's been operating in this gray zone where the CFTC and the SEC can't agree on how it will be regulated. That will be solved in the new administration. That will be a major unlock. The second thing is allowing Wall Street, big banks, big brokerages, to operate in crypto. They've been prevented by that by the prior administration. That's another big unlock. And then just putting pro-Bitcoin comments into the air. I really think one of the big reasons institutions have been slow to allocate to crypto has been they've been worried there's this reputational risk. We now have the highest office in the land taking a pro-Bitcoin, pro-crypto position. That's cleared the air. I think you'll see significant institutional investment in the year to come.
So where do we go from here? Do you have targets, Matt, on where Bitcoin might be in 2025?
Yeah, I mean, first, I think this year you could see Bitcoin challenge $100,000 a coin. That's not that far from here. There's really nothing stopping it between 87 and 100K. Next year, I think we go significantly higher. I wouldn't be surprised for it to vault above $200,000 a coin. I know that sounds like a lot, but when you think about it this way, Bitcoin is competing to be a digital version of gold. Right now, it's about 10% the size of gold. It could double and still be 20%. It would still be early. Until Bitcoin matches gold, I think we're still early in this market, and we have a long way to go until then.
Talk to me more about volatility and if this cryptocurrency becomes less volatile in a new era.
Yeah, absolutely. You know, that's already been happening. I know people think of Bitcoin as extraordinarily volatile. It's about as volatile as Nvidia or Meta or large tech stocks. The volatility has fallen in half over the last 10 years. That's going to continue to decline as you see institutions get involved because they invest for a longer time period than the average retail investor. It'll still be volatile. You don't get 100% compounding returns without some risk, but that volatility is declining. And again, it's in line with those high profile tech stocks that we talk about every day.
Crypto is a dynamic space in and of itself. And so are there particular assets that you think within crypto might outperform in the wake of those election results?
Yeah, absolutely. Look, I love the positioning of Bitcoin. It's a hedge against fiat debasement. It's a hedge against governments building debt. And as far as I can see, the government is going to continue to layer on debt. So I love Bitcoin. But I think Ethereum may be the contrarian play here. The beauty of Ethereum is that the applications that are built on it, stablecoins, tokenization, DeFi, those have all had regulatory clouds slowing them down. They're now unleashed. I think you're going to see exponential growth in that space. And I think Ethereum may be a leading crypto asset in 2025.
Interesting. For our viewers who are interested in adding crypto to their portfolio, what is the best way for them to go about that?
Yeah, absolutely. I'd say 2 things. First of all, remember it's volatile. It's like hot sauce. You want a little bit of hot sauce on your food, but not 30, 40%. We see our investors typically putting 5%. As far as how to do it, ETFs are one of the greatest tools for accessing any markets. That's true in crypto. Our ETF, BITB, listed here on the New York Stock Exchange, charges just 20 basis points per year for exposure. That's a better deal than you could get as the largest institution in the world 3 years ago. So ETFs are a good place to start.
Okay, very good, Matt. And in terms of what we can expect going forward, we had even seen the Democrats actually warm up to cryptocurrency a bit leading into the election. Do you expect that we could see bipartisan support in the future?
Yeah, that's the incredible thing. There were bipartisan votes pro-crypto, pro-stablecoins. Absolutely. I expect Congress to tackle crypto early in the new administration. I expect it to have broad support. I think you'll see a market structure bill. I think you'll see a stablecoin bill. I think you'll see a custody bill. And really, you're going to see the weight pushing into crypto. Still today, only 5 or 10% of institutions own crypto. I think that's going to 50 or more. It's a generational sea change. I think we're going to see a bull market for years to come.
Okay, very good to know, Matt. My final question to you is, how should viewers look at it? Is it a growth play that can rise astronomically, as we've seen, and or is it a defensive play where people go to in times of uncertainty?
Yeah, it's a great question. The funny thing is it has elements of both. I mean, if you look at it from a statistical perspective, it's delivered 100% compounding returns for 10 years. That's an amazing growth story, the best investment of all time. It also has very little correlation to traditional stocks and bonds, so you can add it to your portfolio, and historically, it's diversified your exposure. I think most investors are putting it in the growth bucket. Look, it's not like a treasury bond. It is volatile, but I think a little bit goes a long way, and we're seeing that more and more.
Matt Hogan, great to have you here in studio today. Thank you so much for joining.
Thank you for having me.
Matt is the Chief Investment Officer at Bitwise Asset Management. Well, cryptocurrency is just one topic trending on Wall Street, an important one that we'll continue to cover. Artificial intelligence also is making waves at the NYSE, and one platform is using it in royal fashion. My colleague Trinity Chavez has more. Hi, Trinity.
Hi, Kristen. Yeah, so today we are joined by Emmanuel Filberto di Savoia. He is the Prince of Venice, and he has a career that's spanning from finance, philanthropy, and entertainment. And now he's entering the gaming world with the Royal Land, an AI-powered royalty-themed immersive experience. And now he's joining me to talk more about it. Good morning.
Hello, good morning. How are you?
It's a pleasure to have you.
It's a pleasure being here.
I do want to talk to you, from royalty to gaming. Yes. So this is not a mix that you hear of every day.
But I always did strange things,
Really?
But yeah, because from royalty to television, but now from royalty to gaming, I think it's a fantastic opportunity also for royals to be able to have a new audience, a broader audience, and a young audience. So what I wanted to do with Royal Land is to create a game where royals, actual royals, like heirs to the thrones or heirs of big family, would enter in the game and would play side by side with the gamers and the players.
Can you talk to me more about that? Walk our viewers through exactly what a typical game looks like.
So typical games looks like you have the Royal Land, which is divided in 8 different kingdoms, which is the actual royals. So we have the Italian, which is my family, French, the Imperial House of Russia, the Lesotho, which is an African kingdom. We have Albania, Yugoslavia, all different kingdoms. Inside those kingdoms, you have different states. Gamers will have access to those states, but they will have to increase their power. They will have to increase their wealth. They will have to take other little states. So you can take them by strategy, you can take them by war, but all this needs to be done with the consent of the actual royal families that will be in the game. So you will have an historical part also, which is very interesting because it's also an educational kind of game where history will have a very important part of it, and also the thrill of gaming and taking over new countries and increasing in the ladder of aristocracy, because the actual princes and princesses will knight the people, will knight the gamers. They will have some titles, and it's something quite incredible, I think, and new and revolutionary, and also all this powered by AI.
And what do you hope to achieve with this new game, especially with the implementation of AI?
Well, I hope to, first of all, I hope it will have a big success and a huge success. But I would like to achieve a way of putting together perhaps two kinds of persons, which is royal families and the gamers together, and to have a unique community and to have something, we all saw the big success of The Crown on Netflix. We also Downton Abbey. People today are interested in royals, and this game will actually help. Will be something for them. They will not be actors, but they will be inside the game. They will play among royal families. They will be able to do that. So this is something I think quite interesting.
And it seems like you're really trying to spearhead making this a more immersive experience for the everyday user. Talk to me more about how you're going about implementing advanced technology and AI to achieve that goal.
So we teamed up with a company in Italy, which is called Near Experience. It's a Milan-based company which is quoted on the Euronext, and I think they're the leaders in Europe on AI. They developed, let's say, all this AI technology that will power the game. So, for example, NPC, non-player characters, will all be driven by AI, so that would give much more an immersive kind of way and a realistic kind of way for the players to interact with them. The storylines will also be done by AI. The game lore will also be done by AI. It will be a constant evaluation of the game. It will be a single-player game, but nobody will have the same game, because all the AI will do, it will understand a bit what you are wanting to do, and it will modify the way of thinking. And also, on top of this, the representative of the royal family, which will not be on AI but will be on a physical, will also come and let's say be part with the players. There will also be some live events. For example, the business plan is a B2B and B2C. B2B means business partners will be able to do advertisements in the game, in the lineup. But B2C, there will be like a different, you will have a one-time fee purchase of the game, but also a premium account where you will be able to exceed also and to see and to be with the royals in live events.
Amazing. And just briefly, can you tell our viewers where they can find this game?
So for the moment, the game is at the end of the development phase. We are finishing the vertical slide. There will be a beta version at the end of the year. And then we will go into production. So the end of the beta version will be end of 25, and end of 24, and the game will be playable by the big public end of 25.
Well, thank you so much.
Jump before it jumps.
Thank you so much,
Thank
Prince
you very much.
Adeseboye. It was a pleasure.
It's a great pleasure being here.
Take care.
Thank you. Bye.
I do want to bring in my colleague, Kristen Scholler, back in as we wrap this show. Kristen?
Trinity, great stuff from the floor today. Loved hearing, of course, from the Prince there that you had, as well as UFC Hall of Famer and the small business tie. Of course, we know these markets are sitting right near record highs, and these small cap stocks actually outperforming in today's session after we got that certainty out of DC amid the election last week. Trinity, I know we'll have a lot to cover throughout this week here on NYSE TV Live. We'll leave it there for Trinity Chavez on the floor, Kristen Scholler here in studio, and our entire team. Thank you for watching, as always.
I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital market here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.